Welcome back to the Dividend Diplomats YouTube channel, guys. You've got your favorite dividend investors out here in all of media, Bert and Lanny, guys. It's all about monthly passive income here on this bright Monday morning. Get that coffee going because we're talking about a certain monthly dividend growth stock that has been tearing the cover off the ball.
Smash that subscribe button and give this video boop, thumbs up. Holla at your boys, the diplomats. Time to talk monthly dividends. Time to talk a high yielding stock. One of our favorites on this channel, and especially one of Lanny's favorites, because he's the only one of the two diplomats that owns this company we're talking today.
Oh, it's true. It's damn true, guys. We are talking about none other than Main Street Capital, guys. Yes, ticker symbol Main, MAIN. I have now owned this stock for the better part of about, I don't know, two-ish years here. And damn, I wish I would have bought more. I actually did buy some back in April when they were in the upper 40s, lower 50s, and they are now trading at
Wow.
$65.63 and up over 10% now this year.
That's quite the rebound, Lanny.
Quite the rebound, man.
So what's been going on with Main Street? They released some earnings. They showed some pretty promising numbers here that we're talking about, Lanny, showing net distributable income above $1.06 per share. They saw an increase in that net asset value to 32.30, up from 32.03 last quarter. So that was a nice solid increase on that equity part for what you're going to see from Maine, especially when things are getting tough for some companies.
Yeah, exactly. I mean, solid net distributable income here, guys, $1.06. Net asset value being up from last quarter by about 0.84%. Always nice to see growth in the NAV. And then again, dividends are now up comparatively to this time last year at 25.5 cents per share. So that's a nice little half-cent increase that they do. And we should expect another announcement towards the end of the year for the first quarter of 2026. So I'm anticipating another 2 to 3% dividend increase at the end of the year.
Absolutely beautiful. It's a great company. There's nothing really more to say. And let's see though, Lanny. They in addition to them, I guess before we jump in here too, they also saw a huge jump on the income too. We talked about the income
Real
per
solid.
share. Nav. You saw an increase in total investment income that was up 9% from Q2 last year. So they're growing. They're growing the dividend, they're growing the top line, they're growing the bottom line, they're growing equity. Everything is just growing for Main Street. That's the theme.
Oh, I mean, absolutely, guys. I mean, being up 9% since last year is just so awesome.
Yeah.
I mean, again, they buy portfolio companies, they keep them, they sometimes sell them, sometimes they literally just cash flow them, guys. So it's time to look at Main Street. It's time to see here on Monday morning. Is it time to buy or is it time to wait? And what are we waiting for from a stock price standpoint, guys? So, Bert, you want to kick us off here with Main Street Capital?
No, I'm good, bro.
All
I'm
right, I
good. All right.
figured, brother.
Yeah, I'm cool. All right, price is 65.63. That earnings per share is $4.24. That gives you a price earnings ratio of 15.48. So well below the S&P 500.
Absolutely. Wow. Low PE ratio, guys. The one thing that we'll get into is kind of towards the bottom of this evaluation here. But from a payout ratio standpoint, remember, as a business development company, they're going to pay out most of their earnings to you.
Yeah.
As a holder of this stock, you expect income. You expect that distribution coming in from Main Street Capital. Again, consult your tax advisor because most of this income will be ordinary, ordinary income tax rate. But they pay a 25.5 cent per share monthly dividend, brothers. So if you take that over a projected 424, which really is that last quarter, $1.06 annualized, and you get to about a 72% payout ratio, which is actually safe for Main Street Capital.
Yeah, these business development corps have high dividend payout ratios. So this is very much in the it's very safe. It's kind of like how you talk about realty income, how they have like a 60, low 70% one. It's in that kind of vein here too. But let's talk about the history because I think that's what's really
Yeah.
impressive here.
Talk about that history of dividend growth, man.
Yeah, 5-year dividend growth rate is 4.88%. But what's more impressive is they're almost a dividend aristocrat, Lanny. They've increased that dividend for 17 consecutive years.
Yeah, I mean, doing it for 17 years is impressive. Not only that, but the fact that they pay out a quarterly, occasional special dividend, but we won't get into there just yet.
Yeah.
17 years of growing dividends leads them to a nice 4.66% current dividend yield for this monthly passive income payer.
Regular dividend yield. Remember that regular dividend yield. Performance wise, up again. Landy said it earlier, up 11% year to date, up 35% over the last 52 weeks, and up 100%. You've doubled up on Maine if you've owned them for the last 5 years.
You know what's nice is the fact that they, even during these difficult time periods, they're still able to pay this special quarterly dividend. They did one in Q1, Q2, and they just announced they're paying one here at the end of September. So this year, expecting and being paid 90 cents across three special dividends, guys. So when you incorporate that into the mix here, you end up with a dividend yield currently over 6% and a payout ratio that still is under that 100% threshold at about 93%. So still able to pay this distribution to shareholders.
Almost like this is the way to do it. You pay a regular dividend with a nice solid payout ratio, a solid yield, but then you take your time, you measure what you can pay on the special dividend front, you adjust the top from there so that if there is a down quarter, you have a little room to not announce as large of a special dividend. But if you blow it out of the water, you can pay an even larger dividend than people are expecting. I like this method. I think it's a very sharp way to do it.
Now, the one thing with Maine that I always do is I usually take the share price and take it over the net asset value. And, the share price has definitely grown way faster than net asset value. So currently that's priced at about two times the net asset value, a little bit over two times the net asset value, guys, for Main Street Capital. So that leads me into what do I feel about the price? Is it a great time to buy Main Street Capital stock? Yes and no, right? I think it's overpriced right now relative to its NAV, or is this just we need NAV to catch up to the share price? I don't think it's a bargain price. It's probably priced fair, but I typically like it at, if you can get it below 1.6, 1.4 to 1.6 times NAV is kind of where you want to be, which brings you back to that 50-ish dollar, price point. Again, but when they dropped into that, that's when I jumped.
Yeah.
Doesn't stay there for long, especially lately. So it's still kind of where I want to be. If I see it under $55 per share for Main Street Capital, that's my buy zone right now at 32.30 NAV. I've got to get it lower than $65.
Yeah, I think that's fair. It makes all the sense in the world. Seems like a great entry point for people that are looking, but hey, it's a great company. It's worth the premium today. So that's also part of the equation too. It might not be a value today, but you might not catch it at a value too often. So like when Lanny said, when Maine's at a price point you like, you've got to pounce. It's just one of those companies.
You've got to jump on it, guys. So what do you guys think about Main Street? What's your buy zone? Do you own it? And are you happy with it? Let us know in the comments below.
If you haven't already subscribed to the channel, give this video a thumbs up. And remember, you're either with us or you're against us, Jack.
That was Bert the Hurt and Lanny from the Dividend Diplomats. Over and out.